Hey, welcome back, my fellow investors. It's me, ET. And remember, I'm not a financial advisor. I'm not your financial advisor. I'm just a self-taught investor who likes to talk about ways to increase one's financial literacy and also your net worth. Now, if you notice, I have with me today, I have Goldie. And Goldie was busy in the month of August. And as you know, that basically means dividends. Let's take a look and see how many golden eggs Goldie gave us for the month of August. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23 golden eggs for the month of August. Dividends, guys. That's what I'm talking about when I say golden eggs. Dividends should be a cornerstone of your financial portfolio. Start building up, and I would highly recommend that you start building up and accumulating dividend-paying stocks, especially the high-quality ones. And one of the main reasons why you want to do that is, you know what? I have a clip that I want you to watch. It's about 50 seconds or so. Check out this clip that talks about dividends.
It was like, yo, I treat money like little soldiers. They have to go work.
Listen, but also, he's forgetting something that's major. The ownership.
Yep.
You feel me? So while your money is working for you through the dividends, your ownership, your equity is also increasing.
Yeah.
So that's how you leverage the game with that.
Yeah. And that's something that people don't understand either. It's like people's like, well, everybody's not an entrepreneur. I don't want to own a business. There's a lot that comes with owning a business, but there's more than one way to own a business. If you buy stock, you're an owner in that company.
Yeah.
That's probably the easiest way to own a business. Now, you're not going to be a majority owner, but it doesn't matter.
It doesn't.
You're still an owner.
1% of something is better
So,
than 0%.
but listen.
All right, in that clip was from Earn Your Leisure's. They have a YouTube channel, and the guest was a guy by the name of Wall Street Trapper. That was the guy that was in the middle. He's a frequent guest to Earn Your Leisure. And he is a self-made millionaire, multi-millionaire. He made his money investing in the stock market. He's a, kind of a disciple of Warren Buffett. He believes in a lot of his investment method and philosophy. And, he's going out and he's doing his own thing now. You can also follow him. He has a YouTube channel called The Wall Street Trapper. Go ahead and check it out. First of all, it's very entertaining, very educational. So go ahead and check it out. But the bottom line is this here. When you look at that clip, you're looking at putting your money to work for you. All right? Cash flow. Cash flow is the dividends that the company is going to pay you. All right? You got capital appreciation. And the very last thing that they kind of alluded to and talked about real quick was an ownership. We have to go ahead and perpetuate that ownership mindset. That is one of the mindsets that's needed in order to build wealth. So with all of that, let's go ahead and take a look at the 23 golden eggs or dividend payouts that I received in the month of August. Also, stick and stay to the end, because at the end of the video, I am actually going to go over the tracking mechanism that I use for those 23 companies that paid me out in August. It'll show you the current value of all of those stocks, as well as my cost basis for that. And you guys get to see what I'm talking about when I say capital appreciation as well as cash flow. So let's go ahead and check it out. If you don't find a way to make money while you sleep, you'll work until you die. That is my mantra. I will start every dividend payout video speaking these words from Warren Buffett. I believe in this statement. So let's take a look here at the month of August dividend payouts. Okay, this first slide here, all this is here is just a quick summary of my dividend portfolio in 2020, the total payouts. I use my dividend portfolio and invest in stocks for, the capital appreciation, but also for the cash flow. In two ways you can get cash flow from owning a stock, and that's through dividends and also writing covered calls. So for 2020, this here is what I made in cash flow when it comes to dividends, over $3,000, and for the stocks that's in my dividend portfolio that I wrote covered calls on, I made over $7,300 for that year. If you want to take a further look at this, just go ahead and pause it, and that's with any of these slides. Pause it, go ahead and take a look at it, dissect it, and you can either send me a question or make a comment in the comment section. All right. This here is the Charles Schwab dividends payout summary. I love this chart that they have. I love the way that they track the dividends and the dividend payouts. For the month of August, I was paid out a total of $365.80, a total of 23 payouts. Another reason why I like this, it gives you currently, this is what I'm averaging per month, and it tells you my estimated yearly payout for 2021. Another good thing that I like about this here is if you click on this button right here, the next 12 months, it'll show you the next 12-month projected payout. And as you can see, my monthly payout went from $298.70 to $321.45. The yearly estimate for the next 12 months is going to go up to $3,800, and that's about what's that? From $3,500. Now, the key thing is this here. That's just based upon the stocks that I have right now. I don't have to add any more money to it. I have the drip set up, so it's calculating that there. So, bottom line, this here shows you the magic of compounding interest and having your money work for you and reinvesting your money back into the stock. Now, this next slide here, this slide is these are the stocks that I bought in August. Quick summary, I bought a total of 6 different companies in the month of August, a total of 67 new shares of stock. It cost me $923.40. Actually, you'll see that I sold a stock and used that money to buy another stock. We'll go over that in a second. But that's going to generate me an additional $12.76 quarterly, or $51.04 on a yearly basis. Comes out to about $6% annual yield. Now, as you can see, these are the stocks that I picked up ARR as a REIT. Pays out monthly dividends of 10 cents. Picked up a total of 10 shares. I also picked up 6 shares of ExxonMobil. It pays quarterly 87 cents. The next one here is REMI. This one here is that's a REIT, but it's leverage, 2 times leverage. That's a very, very risky play, but I picked it up for the large dividend payout. I'm gonna be honest with you, no ifs, ands, or buts about it. 10 shares, it pays 5 cents per month on a monthly payout. And then I picked up SLVO. That's silver shares. I'm in the silver market there. 20 shares, pays monthly 5 cents per share. That is such a high dividend yield position that, and it's a risky position, and it doesn't allow for a DRIP, dividend reinvestment. That's all right. I'll take that money and invest it in another dividend stock. I also bought USOI, which is a crude oil, another very risky play, high dividends. We'll go over that in a second, but it's a monthly pay. It pays out 6 cents. It's also not eligible because of the risk factor, not eligible for a DRIP. And we'll talk more about that towards the end of this slide presentation. Then, of course, the one tried and true 3M, 1 share, pays out quarterly $1.48. So that is what I bought in the month of August. Let's take a look at the stock that I sold in August. That was North American Tankers Limited. I've had that for quite some time, and realistically, it was time for me to go ahead and get rid of it, get it out of my portfolio. I sold it on the 4th of August. As you can see, I made a copy of the sell order there, just so that you can get an idea of what the current price was, and I was down. Bottom line, I was down 37% in that stock. I replaced that stock. The money that I received from that stock, that's what I bought the 6 shares of Exxon Mobil. And then I decided to go ahead and put the rules for selling down that I'm going to be using. Number one, if there's an announcement of a dividend cut, I'm going to definitely take a look into that. And more than likely, it's going to be a high probability that I'll go ahead and sell and get out of that stock. Also, I'm tracking my losses, my profit and loss for those stocks. Once I'm down 20%, it's time to jet, time to move on. Also, since I do on some of these write covered calls, it's possible that it can be exercised and taken away from me. That's the risk that you make with a covered call. However, I'll make sure that when I write a covered call that I'm going to be in a position that overall I'm going to win, not only on the cash flow received, but also on the capital appreciation. And also, the very last one of the rules that I have is, if I see a better investment and I need capital, I may go ahead and sell to move to a better investment. So with all of that, let's take a look at the actual 23 individual payouts for the month of August. The very first one, REML, all right, pays out monthly. Like I said, this one here is a high risk stock. Look at that distribution yield, 12.9. Might as well just say 13%. So I'm going to give it a shot. Currently, I bought 10 shares, but it already paid out and picked up an additional 0.08 shares to that. So this here is the number of shares. This here is a position income summary from Charles Schwab report. I like this because it gives an individual stock breakdown. Just like you've seen on the overall dividend portfolio summary, this here goes individual stocks. So you can take a look at this. If you see one that you like, you can go ahead and pause. But the thing I like about it tells me the number of shares, the current total value of the stock, and the current year payout for 2021. I didn't have it last year, so it didn't show previous year. And it also shows the payout for the next 12 months with the number of shares that I have. Next, we have PG, Procter & Gamble. Procter & Gamble paid me 87 cents, and it pays out quarterly, 2.4%. I own a total of 1 share. The next one here is ARR. This is a leverage portfolio play. It's a leverage portfolio REIT that leverages mortgage-backed securities. And as you can see up here, the dividend yield is 11%. I own a total of 10 shares there. So this one here is a risky play. I'm going to definitely keep my eye on it. And trust me, if I see something that, if I get an indication that I need to get out of this, I'll go ahead and get out of it. But I'm going to try to play it as long as I possibly can for that high dividend yield. Next one that I have, and that one paid me $1 in the month of August. Next one I have is SLVO. This is another high risk play. This is the silver play. It paid me $1.01. And here's the breakdown. Look at this, might as well say 36% yield. Now I know I've been in this investment game long enough that you don't chase the high yields. All right, I am chasing this high yield, and I'm keeping my eye on it. And trust me, I'll know when to jet, but I'm trying to take advantage of these high yields for as long as I possibly can. All right, next up we have Suns. Paid me $1.03. Here's the breakdown, monthly payer, almost 8% annual yield, and I have a total of 10 shares. Next we have Gladstone Capital. Paid me $1.04. 6.7% yields, and I have a total of 16 shares. at any time, since I'm going to start going faster through these, if you're interested in really looking at the information, go ahead and hit the pause. Next we have BRMK, have a total of 15 shares, pays 8%, monthly pair. There we go. Next I have Apple. Apple, I have a total of 5 shares, and it paid me $1.10. Next we have JPS, it paid me $1.10. I have a total of 22 shares, a monthly pair, 6% in distribution yield. Next we have LTC, paid me $1.17, 6.5% annual dividend yield. I have a total of 6 shares of this stock. Next we have USOI. This one here is the crude oil play. Number one, you're looking at a 20% yield, high risk. Another one that I'm definitely going to be keeping my eye on, but I want to see how long I can take advantage of this high yield. I own a total of 20 shares. It paid me $1.36 in the month of August. And here we have SCM, paid me $1.60, 8% yield, total of 16 shares. Next we have UTF, $1.67%. Monthly pair paid me $1.67. I have a total of 10 shares. Next we have PTY, $1.68. Monthly pair 7.8%, 13 shares. Next we have Main Street Capital, $3.22. Monthly pair also, and then pays me 6% yield, total of 15 shares. Next we have Orchard Island, and paid me $6.50, 15% annual dividend yield, pays out monthly, 102 shares. Next we have SPHD, $6.62 paid out in the month of August, monthly pair 3.7% distribution yield, total of 52 shares. Next I have O is Magic, total of 41 shares, and I paid it paid me out $9.71. It pays out on a monthly basis. Next I have QYLD, paid me $9.73. Distribution yield of 11%, pays out monthly. I have a total of 52 shares. Next we have Chai, paid me $23.84. I have 252 shares, pays out monthly, 7%, 7.3%. GOL paid me out $48.48. It's a monthly pair, 10% distribution yield. I have 268 shares. Next I have PSET, Prospect Capital, paid me $67.23. That all of these on a drip program, and I always just like to put, especially for Prospect Capital, it bought me 8 new shares. It's a monthly pair, 9%. I have 1,028 shares. The next one here is C. My biggest payout for the month was Citicorp. Paid me $174.22. It pays out quarterly, 2.8%. I have 344 shares. That is the very last payout, number 23 for the month of August. What I want to do now, all right, that's the payout, 300. If you add all that up, it comes out to $365.80. What I want to do now is talk about those 23 companies that paid me out in August. This is what I invested. This is what I paid, overall paid for those 23 companies and the number of shares that I have. $27,391.99. The current value of that is $53,000. That is a 96% capital gains on that. If you stick and stay to the end, at the very end, I will show you my tracking mechanism for those 23 companies in the month of August. So you can take a look at that. All right, get through this here. All right, and as you know, that there gave me an income of $365.80 for the month of August. This here is the tracking sheet for those 23 companies. overall in my dividend portfolio, I have a total of 32 companies, but this is the 23 companies that paid out in the month of August. And it breaks it down like this. Of course, the ticker symbol, the number of shares that I have, the payout for the month, the current value, my cost basis. My cost basis is what I paid for those stock. It is not calculating the dividend reinvestment that were purchased with the stock from the dividends. So this is just what I paid out of pocket. All right. And then it shows the profit and loss for that and the profit and loss percentage for each one of these. And as you notice, my best performer here is Citicorp. And the reason why Citicorp is my best performer is because during the real estate crash of 2008, 2009, I started accumulating shares of Citicorp. And at that point, because it was so doggone low, that's why my cost basis is low. You look at that, my cost basis for those 344 shares. Last year, at the beginning of 2020, I actually had over 600 shares. And once again, I sold some of those shares to use that capital for other investments. But as you can see, my profit and loss percentage on my P&L for Citicorp, hey, I'm plus 308% on that. That's one of my best performing stocks there. And then you can just kind of go down the list and take a look. I have 2 of the 23 that's currently in the red, and that's LTC and Orchard. LTC, as you can see here, is down 11%, and Orchard is down 5%. I keep track of that. This is what I use to figure out whether or not I need to get out of that stock. All right. I'm looking at stocks for the cash flow and capital appreciation. And as you can see, it gives me year to date, it gives me a total at the very bottom. And this here, this is what I spent. This is the current value of those stocks. That is the profit, over $26,000. That's a 96% profit on that initial $26,000 investment. Now, this section here kind of breaks it down. Just based upon the current value and the payout, we're looking at a yearly yield of 8%. But based upon my cost basis, it's 16%. That's what a lot of people need to keep in mind, all right? And that is, as your stock starts to grow, appreciate, and capital appreciation, your overall cost basis, when it comes to the dividends that's been received off your initial investment, starts to go up. So a lot of people don't track that. I track both current value and my cost basis value when it comes to yearly yield and distribution. So there you have it. Total of 23 payouts in the month of August, totaling $365. Now, also at the end of the video, you've seen that you took a look at my tracking sheet that I used to track the performance of my dividend paying stocks. You guys need to understand that I believe that tracking is a critical task or a critical tenet when it comes to increasing your financial literacy and also increasing your net worth. Of the tenets, the 7 tenets that I have, tracking is number 7, and they're in no specific order, but it's important. If you want to improve performance on anything, regardless of what it is, you got to track it. Your tracking is going to tell you whether you're on course, whether or not, and it gives you an indicators of whether or not you need to make some adjustments or some decisions to adjust. So just kind of keep that in mind. One of the things I'm working on, I should release it real soon, is I'm going to have release a video on my total dividend portfolio. It's going to be exposed. I'll go over all 32 stocks that I have in my dividend portfolio, why I have them. You'll see my overall tracking sheet when it comes to the current value, as well as my cost basis for my entire Dividend Portfolio. That's going to be coming soon, so be on the lookout for it. Well, with all of that, hey guys, I will see you on the next video in October talking about the payouts that I received here in September. Guys, just remember one thing. You got to save. You save to invest. You invest. You got to put that money to work. And as you continue to learn, apply what you know, because knowledge is not power. It's the application of knowledge that's power. Guys, I will see you on the next video. Take care. Bye-bye.